What started as a noble attempt to stimulate economic growth has now degenerated into a situation that threatens to get out of control. For the last 2 years, the central bank has focused on releasing more money into the economy to stimulate consumer spending and support growth through lower interest rates. But the end result has been too much money chasing after limited commodities, with demand outstripping supply and prices continually rising. An increase in imports to match the demand has weakened the local currency, and this, coupled with the devastating effects of drought and expensive fuel, has yielded a high inflation environment in which the average Kenyan is struggling to make ends meet.
This is now the cost you have to pay. It was going good, now it's payback time. Inflation is on board.
Last week, the central bank reversed its monetary easing policy and raised its benchmark lending rate to 6% in an attempt to mop up the excess liquidity in the market. But though the action was laudable, economists say it may not be enough.
It's a good measure. I think that was a prudent move. What I'm not sure about is whether it was adequate.
Prices of basic commodities have continued to rise unabated without corresponding increases in earnings, setting the stage for a double-edged conflict in the market. Manufacturers have maintained that they have no option but to pass down higher production costs to consumers, who in turn are likely to start agitating for more income, which now calls for urgent but workable solutions.
We've tried to cushion a lot of these costs in our cost structure. Unfortunately, there's a lot of some of it that we can't pass. We have to pass on.
Very soon, laborers, workers are likely to agitate, to say they are looking for enhanced wages so that they can compensate for the loss in purchasing power.
Let's make sure that our food and essential requirements are already with us, or are on the way, or are going to be ordered, and the money is kept on one side.
But though the government may be in a position to act, such a move is likely to stagnate economic growth, meaning that a combination of measures including controlling money supply, subsidizing consumers and extending incentives to producers, as well as toning down on politics to attract and retain investment, may serve to forestall stagnated economic growth and create jobs in the medium term.
What they are doing injures the ordinary folk, and because we think they are too superior. And I think this is an area we need to tackle, to say, look, politicians, you need to cool down your temperatures.
Wanjiru Gaidho, Citizen Business.